In this video, we're going to be going over how to use the premium stock valuation spreadsheet from Tickerdata.com. And you can see here, we're already on Tickerdata.com, and I've already signed in and become a premium member of Tickerdata.com. Now, once I've done that, I just need to come up here and click on Premium Sheets. And you can see we're going to have a full library of different premiums for each Tickerdata provides. But up here near the top, we can see Tickerdata Stock Analyzer Tool. If we click on this here, we can see we're going to automatically be loaded into the stock valuation spreadsheet. Now, the first thing you'll notice is we're seeing error signs and we can't use the spreadsheet yet. And the reason behind that is we need to come up here to File and click on Make a Copy so that we can edit the spreadsheet. So I'll click on Make a Copy, and now we have our very own spreadsheet loading in. So I'll zoom out just a little bit. Now we're still seeing the error symbols here. Why is that? Well, we simply need to sign in and refresh the spreadsheet. If we come up here to extensions, you can see we have the Tickerdata extension already downloaded. Again, if you don't have it downloaded, you can download it here on add-ons. Once we've done that, we'll come over here to Tickerdata and click Log In. And you can see down here it says it's working. And then we'll have this login space show up right here on our screen. All we need to do is come up here and click on Refresh and Return to Sheet. So I'll click on this, and you can see now it's going to take just a few moments to go ahead and load all of this data in. Once you've done that, you can see all the data is starting to load in, and you can see just a few more things need to load in over here. It looks like sector needs to load in, but once you've done that, all this data is going to automatically load in. So now our screener sheet, all the data has loaded in, and if we want to change what stock we are looking at, we could just come up here and change it right here. So let's say maybe instead of Microsoft, we want to look at, maybe we want to look at Starbucks. You can plug in Starbucks here and hit enter. And you can see all the data for Starbucks is going to automatically load in. Let's go ahead and put it back on Microsoft. I'll plug in MSFT and hit enter. And again, you can see all this data is going to go ahead and automatically load in. So we have a lot of business metrics listed over here that I like to see. We have some dividend data metrics, some free cash flow metrics, then a lot of other key metrics right here listed out as well. We can see the current price, the 1-year return, and the 2-year return of the company. Now let's go ahead and run through the different valuations. Now this isn't a valuation of Microsoft, this is just an example video. So keep in mind, this will just be example data. But if we jump over to Graham's valuation, you can see right here we have two different valuations, and this is Graham's adjusted and updated valuation. This is the one I suggest most people use. If we go ahead and zoom in, you can see basically here what we have is we have Graham's valuation listed out. And right here we have our estimated earnings per share average. Now, as of right now, this is automatically pulled into your spreadsheet using the Tickerdata function. But if we just copy this over, let's go ahead and plug this in right here and hit enter. You can see this data is going to automatically load in once again. Now, the estimated earnings per share average for Microsoft as of 2023 was 10.36. If we go ahead and change this to 2024, I'll come up here and change this and hit enter. And you can see this number bumps up to around 11.65 for the estimated earnings per share for Microsoft. So let's go ahead and remove this. And maybe after doing some more research, keep in mind this is an estimate, maybe we think it's going to be closer to 12. We'll plug in 12 right here. Then we want to apply our growth rate projection. Again, this is something you have to research for yourself to plug in, but maybe we think an accurate growth rate projection for Microsoft's earnings per share is around 16.5. I'll plug that in and hit enter. Then we plug in the current yield on AAA corporate bonds. Maybe it's currently 5 at the time you perform this valuation. Once you plug all this in, you can see we're going to come to an intrinsic value. So that's how you use Graham's valuation. Now, the next one we're going to use is going to be our discounted cash flow analysis. And the idea behind this valuation is we should be able to value a company based on how much free cash flow they're going to produce in the future. And much of this valuation is completely automated again, thanks to Tickerdata add-on. You can see all the free cash flow metrics are automatically pulled in thanks to the Tickerdata function. And we can see the average growth rate for Microsoft's free cash flow has been around 10% over the past decade. And again, we need to project a growth rate to the future free cash flows of this company. So maybe after doing more research, looking at historical data and analyst estimates, we think Microsoft's free cash flow will grow at a growth rate of around 17%. So you just plug in that number here. So maybe you plug in 16%, but we're going with 17%. So I'll plug that in. And these numbers here are all going to automatically update. And then it's going to automatically find the present value of these future free cash flows as well. Now keep in mind, we need to plug in our discount rate here as well. And I'd advise you using a perpetual growth rate of around 2.5%, which is essentially the rate that the economy grows at year over year on average. It then automatically adds the sum of all these future free cash flows, and then it also pulls in the cash and cash equivalents and total debt automatically thanks to the help of the Tickerdata function. We then get equity value, and then we also have our shares outstanding thanks to the Tickerdata function automatically pulled in. and it gives us a DCF price per share of about $389, pretty close to that current trading price. So again, this is just an example, but you can see much of this process is completely automated with Tickerdata. Now, if we jump over to the multiples valuation, essentially what we're going to do is you're just going to plug in comparable companies to Microsoft right here, and the valuation model will do the rest itself. So let's say we plug in Apple, we say that's a fair valuation. Maybe we plug in Amazon as well, and maybe we plug in Meta, so a lot of the big tech companies. All this data is going to automatically load in, and it's going to give us the price to earnings multiple for these companies. This valuation then takes the average PE multiple, multiplies it by Microsoft's earnings per share, and it gives us the intrinsic value based off that data at $390. So again, all we need to do for the multiples valuation is find companies that we feel are good comparables for the company we're evaluating. Then lastly, we have the dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. And again, we can see thanks to Tickerdata, all of this data is automatically loaded in. We can see the historical dividend data, the yearly dividend data, and the dividend growth rates year over year, and the average growth rate over the last few years for those dividend growth rates. So all we need to do is apply our dividend growth rate projection and our discount rate. So let's say we go with a dividend growth rate of 8.25% and a discount rate of 9%. We would come to a dividend discount model price per share of $433. So again, you just have to plug in these variables here based off the historical data and the projections you want to make. But once you've done that, you've now used all four valuations, and if you jump over to the output tab, you can see all four here and the average of those four right here. So it's pretty close to the current trading price, but maybe you want to apply a margin of safety. You could apply a 10% margin of safety and see you come to an acceptable buy price of around $328 per share, and with a 20% margin of safety, acceptable buy price of around $292 per share. So that is how you use the Tickerdata stock valuation spreadsheet. Much of the process is completely automated thanks to the help of the Tickerdata add-on in Google Sheets. So again, it's a very simple and easy process to get started. Simply become a premium member on Tickerdata.com to get access to the Tickerdata function and access to the Tickerdata premium spreadsheets. And keep in mind, Tickerdata is constantly adding new spreadsheets to their library for you to use and for you to try out to help automate your analysis and portfolio tracking. So again, head over to Tickerdata.com at the link in the description if you're interested in using any of these spreadsheets or using the Tickerdata add-on. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.